Lies lenders tell. So yesterday I was talking to a guy who was pretty frantic, and the reason he was frantic is because he had been told he was going to be getting a specific rate by a lender, and then when he got into contract it was much higher. Now that's not unheard of, and the reason is, and I have other videos on this, but your pre-approval letter is not the rate you're necessarily ultimately going to get because interest rates change daily. Okay, that's important for you guys to know. Interest rates change daily, so there is the possibility your rate could be higher. There's also the possibility the rate could be lower. Now, in this situation, the rate the borrower was being quoted, this was a VA loan, it was high. It was on the high side for sure. So we're like, okay, you know, no problem. He was in day one of the contract. We're like, we're happy to step in. We can offer you XYZ rate. It was actually the difference. It wasn't a full 0.5%. It was 0.375 lower with no lender fee. So it was substantial, especially on a $500,000 loan. And he was like, I want to do that. I want to work with you guys. I looked at your reviews. I want to go with you. I hate this guy now. I hate him. I hate him. But I'm scared. Okay, wait, why are you scared? What's going on? What do I not know? He goes, he said that if you run my credit, then it's going to make it so he can't do the loan. Okay, so let's dig into that lender lie. Okay, so here's the deal. Now, if your credit, let's just play all of the different scenarios. We're gonna do this together. So first of all, if your credit was like on the cusp, okay? Let's say your lender pulls your credit on October 1st, and on October 15th, you get into contract and you call me and you're like, Jen, I want to switch, but your credit's on the cusp. And he's like, it's going to ruin it if you go to another lender. BS. BS. Here's why. So his credit pull from October 1st doesn't change. Your score's not going to change from when he pulled it. Now, if we're talking about February, everyone's looking at repulling it, okay? But October 1st to October 15th, it's not going to affect his report. He doesn't have to pull credit every single time you breathe. And that's the big misconception is, well, if I pull my credit with you, right, okay, so there's him. We're going to call him Bob. Poor Bob. So Bob ran his credit. Bob's saying, don't let Jennifer pull your credit because it will ruin it for me. So me, I pull your credit. Even if I end up with a lower credit score, it doesn't affect his credit report. His credit report is not a living organism that's constantly changing. Now, if you buy a car, if you stop paying your bills, yes, but a credit pull from a competitor, absolutely not. Absolutely not. Our government does some messed up things, but they also do some good things. They're not gonna like allow it where you have no option to have competitive quotes or anything else, okay? Now, here's the thing. So when I was talking to the client, I was like, okay, you know, why are you so worried? What is your credit score, right? Because if it was like 599 or 600 or 602, okay, I can see why he might be a little nervous. Still won't affect Bob, okay? Let me circle back to that. Bob's still lying. Bob is still lying. But from my perspective, I may not get the score I need in order to close the loan. So it may be a disadvantage for me. Okay, well, here's the thing. Do you guys want to know what his credit score was? Are you ready? Are you ready? What was his credit score? Why was Bob instilling the fear of God in him? 711. That's a really good credit score. That's a really good credit score. Like 711. It was a total lie scare tactic. I pulled the credit, I got 711, right? Because Bob had pulled it 2 weeks earlier. So I was still within that window where it's not gonna hurt the client's credit score. But what Bob was doing is that this client in specific was not super confident about their financial situation because they hadn't had a ton of financial education like the entire country. Like financial education in the United States is like, where is it? Can we find, is it, oh God, is it there? Where is it? Hey, Bob, yeah. So lenders often will use the lack of financial education in the United States to scare people. So in this case, that was a total lie that me pulling the credit was gonna make it so he couldn't do a loan. Now, the next thing he said is he said, well, Bob, you know, well, no, he's Bob. Okay, let's call the client Joe, okay? Well, Joe, you know, I structured your loan to pay off a credit card. Another lender can't do that. Why? What? Like, what? And then my team looked at it. So Jen Anderson, you guys have seen her on a construction call with me, right? And she's awesome. If you guys have worked with Jen and Chadwick, you know that those two are a dream team, married too. And she looks at it and she calls me and she's like, Jen, the guy didn't even pay off the right credit card. She's like, the client could pay off these 2 credit cards that are smaller and we could get a bigger impact. And I'm like, yeah, that's what I thought. That's what I thought. So, you know, whenever lenders are like really like freaked out if you're talking to competition, it's usually a red flag that they know they're not competitive on rate. Okay, and it's also a red flag that they may not be as experienced as they're letting on. In this case, I actually looked up the lender, and you guys can always go to NMLS Consumer Access, okay? And I'll have a link to that. You can type in the lender's number, and it will tell you how long they've been in the industry, you know, what they did before they were in the industry, you know, how often do they switch where they work. I would tell you guys, like, lenders who are hopping every year, you could not pay me to work with a lender that hopped every year. It is a red flag. Like, as a lender, the way that we make the most money and we build the best businesses is we stay put. You only leave if something's broken dramatically. If someone's switching where they work every year, it's a sign that they don't know what they're doing, so they keep on burning out at every company, because underwriters, processors, underwriting managers, they'll only put up with so much before they tell the sales managers, this guy doesn't know what he's doing. So in this case, we were able to rescue Joe, got him a much better rate, saved him from the clutches of Bob. It just took a while because we had to break down all those lies that Bob had told. So whenever you guys are feeling strong-armed, always feel free to reach out to us. You know, I'll tell you if it's too far in the transaction. We'll tell you what we can do, what's possible, what's not possible. And if there is a reason you can't switch, we'll tell you. You know, there's certain stuff I can't do that other lenders can, just like there's certain stuff other lenders can't do that I can. So always good to have those conversations. I have a calendar link. You guys can talk to me or someone on the team at all times. We really want to get the education out there so that this type of behavior stops. So once again, thanks for watching, guys. Talk to you soon.